So this stock was a disaster for me. You can see this falling window. This is a 9% falling window. But anyways, let me explain how I lost 2.85% on this stock. I was very lucky that I did not lose much. I could have lost 8% in this stock, but I ended up losing only 2.85. So let's first look at why did I buy the stock in the first place. So let me take you to my buy point. So this is what I saw. Let me remove this. So the yellow line is my buy price. The red line is my 8% stop loss, which is below the yellow line. And this is the base. So this is 0.1, 0.2. Let me draw it for you. 0.1, 0.2, 0.3, 0.4, and 0.5. I'm looking for minimum 4 points in the base. This base has 5 points. Okay. And there are 10 candles in the base. So if 0.1 starts from here, I start counting from this candle. So 1, 2, 3, 4, 5, 6, and so on. So there are more than 10 candles in the base. There are more than 4 points in the base, which means 2 compressions or 2 corrections or 2 contractions. Okay. So that's 2 weeks of consolidation in the base minimum. And of course, you have the moving averages. So the blue, the green, and the red, the moving averages are there, one above the other, the 50-day moving average, the 150-day moving average, and the 200-day moving average. If it is green, blue, red, then I would reject the stock. If it is red, green, blue, I would reject the stock. I only want the blue, green, red combination. Okay. So we have that. So blue, green, red, 10 candles, 4 points in the base. That's my criteria. And I buy the stock. Buy in a sense, I put my buy order at the yellow line, which is 2.5% position size in this case. And I keep my stop loss here if it triggers my yellow line. Look what happens the next day. It triggers, it closes 3.17% higher on that day compared to the previous day close, but it does not close above the yellow line. Okay. Now let us try to understand what went wrong here. What did I miss here? Number one, the buy point is in the green zone. The green zone is the upper quarter. The blue zone is the second quarter of the base, and the red zone is the lower half of the base. So in this case, the buy point is in the green zone, which is a very good positive. Okay, I want the buy point to be in the green zone so that I can hold the stock for a longer move. Another good thing is that whenever the buy point is in the green zone, I am okay with 4 points in the base. I don't need 6 points or 8 points in the base because the buy point has already reached the green zone. I don't demand too much from the stock. 4 points is more than enough in the base for me. But what I did miss here is there is no price action after 0.2. There is no price action in the green zone. Okay. I would want to see at least 2 or 3 candles closing in the green zone. Okay. Which I discussed with a stock, which was Zomato, I think. I published the video yesterday. In Zomato, there were 3 closings in the green zone. Okay. Check that video. I will maybe put a link somewhere here. But the more the candles that close in the green zone before breaking out, the better it is. I can hold the stock for a longer move. Okay. So there is not a single candle that has closed in the green zone after 0.2 and before this breakout candle. That's a negative. I have overlooked that fact. Now, that was one mistake. Another mistake is when this candle closed below yellow line, at least at that point, I should have realized that I have made a mistake. Okay, at least at that point, I should have realized that I should at least cut my position by half. Even that I did not know. So even that I did not do, which means I was not concentrating on this trade. Okay, next. You see what happens next. Now, on this day, I did not sell anything because this is a low volume candle. Nothing to worry about. The institutions are not selling. But just look at the shape of the candle. The shape of the candle should have at least alerted me now that at least this is the time when you should look at the base carefully. Why is the price doing like this? Why is it consecutively closing below the yellow line? Okay. One possible reason could be there is no price action in the green zone before, after point two and before the breakout. That could be one possible reason. There is not much strength in the stock. So I did not sell on the day. Now it shoots up. Okay. Now it comes out of the base. This is 4.71% in a single day, and that too on high volume. I said fantastic. This is great. Okay. Because this is what I was looking for on the breakout day. But since I had the patience to wait, I am making good money here. I still hold on to the shares. But look what happens next. Okay, low volume candle, long lower shadow compared to the upper shadow, which is a bullish candle. I did not do anything. I just held on to my shares because the stock is now out of the base. See, the stock has crossed that green zone. It is out of the base. So I'm very happy here. Now look what happens. Look where the stock opens. It opens 9% below the previous closing. See here till here, the opening 9.41%. So imagine a stock that you hold and it gaps down on the opening 9.5%. That's a disaster. Psychologically, that's a disaster. Okay. So since I had placed my stop loss at a sufficient distance, which is 8%, I could hold on to the stock. The red line is the ultimate line. If it touches the red line, I'm automatically out of the stock. Okay. But in this case, it did not do that. It did not touch that red line. Okay. It's very important. And I had the patience to wait till the end of the day, because there were some other stocks like Zomato where I was making money, where I had booked some realized gains. So the realized gains in my portfolio were more than my worst case scenario. So I had I could afford this risk. That I would put it that way. I was able to afford this risk. I could hold on to the stock. But imagine if I had 10% position in the stock, or maybe 20% position in the stock. Well, I would have had to sell immediately on the opening, because this is a disaster, right? So I waited till the end of the day. The stock recovered, came here just 5 minutes before the closing. I ended up selling all my shares because there is a falling window now. Falling window becomes a resistance. So I did not realize my mistake on this candle. I did not realize my mistake on this candle. On these two candles, I became overconfident. And suddenly I realized that, okay, I'm in the wrong stock. Finally, I realized that, okay, there is a falling window here, which is a clear sign of weakness. And I just sold out. So that is how I ended up losing. See, from the yellow line till here, it's 2.85%. Okay, so I ended up losing 2.85% in the stock. So I hope you understood what I should have done here and what I should not have done in this case. First, I should have sold half here. Second, I should have sold another half here. So by the time this candle, these two candles came, I should have been out already 75% of all of my shares, right? But I did not do that. I could have limited my losses here. Instead of booking 2.85% loss, I could have easily come out with a 1% loss overall on this position size of 2.5%, which is negligible as compared to my overall portfolio. So the point I'm trying to make here is the market gives us clues. The candle gives us these little nuances. They give us clues as to what we should do with a particular stock. The clean breakouts are the ones that just close above the yellow line with high volume, no questions asked. Generally, the clean breakouts are the ones where the volume is significantly higher than twice the average volume, and the closing is significantly higher than the yellow line. That's a clean breakout. Okay, this was not a clean breakout, so I should have sold some of my shares, which I did not do. That's a mistake. Okay, so I hope you understood this. If you have any questions or doubts, let me know in the comment section. Thank you so much.